Hello guys, it's Undercover Trading here. So we'll be discussing about smart money concept. Yeah, a lot of people have been actually delving into the smart money concept without really understanding what they're actually trading. Yeah, smart money is good, but I want you to understand that just like we have the other chart patterns like the rising wedge, falling wedge, symmetrical triangle, double bottom, double top, head and shoulder, blah blah blah, they all work. A lot of people don't really understand the fact that trading, or rather forex trading, is just basically how well do you manage your account? How do you manage your risk? What's a risk management strategy? That's basically what it's actually saying. Not how much you're trying to make. No, if you keep trying to catch the money, you'll be losing trade because you'll be too emotional with the market without actually understanding and reacting to the market directions. So apparently, all you need to know is try as much as possible to have a good risk management plan. That's the only way you're going to be a consistent and profitable trader. Now, coming back to the truth behind smart money concept. Yeah, smart money concept is really nice. A lot of people are doing it now, and so many people are wonderful. Like, I mean, great. I can't say I'm the best, but yeah, I'm good at what I do. But then so many people keeps asking me the question of how do you know which OB the market is going to turn from? How do you know exactly which one that you see the OB everywhere in the market? Yeah, it's true. You're going to see OB everywhere in the market, literally everywhere. But the issue is, where are you looking for the OB? A lot of people will come looking for OBs around this kind of movement. You can see clearly that the market is in an uptrend. And why are you looking for an OB around that area? That's the problem. You just jump into smart money without understanding market movements. That's really wrong. Yes, I know some people will say that, yeah, the market doesn't move this kind of way. You know what I mean? Like higher high, lower low, higher high, low, or higher low, thereabout, and stuff. Everybody has his own pattern of trading. That's the honest truth. I'll always tell people, yes, go out there, learn what you want to learn from somebody or your mentor. Then try and find out what you really want from trading, what you really want to do with it, what you've learned, how do you modify it and make it your own. That's when you know, yes, you've mastered the strategy. So, right now, I'm going to be sharing with you something very, very, very simple, but then a lot of people still don't apply it in their trading aspects and their trading plan. So, the question is, how do you get the right OB to trade off of? As you can see, I marked up three OBs here. Yeah, apparently, the first one is try as much as possible to limit your time frames. Yeah, I know it's crazy. A lot of people look for OB from the daily, maybe at 1 hour intervals, all the way down to the 1 minute. It's crazy. You look for OB 1 hour from the daily till maybe the 1 hour time frame. Then they will switch to 1 minute from the 1 hour time frame till they get to the 1 minute. Then you see a lot of OBs, man. It's gonna be crazy. You're gonna mark up so many OBs that you can't even count them. Now, some other people say, okay, you can actually get the right OB by looking through all those time frames and selecting the one with the highest confluence. Good. It's still okay, but come on, it's time consuming. You don't want to be spending so much time on this market. I know some people actually say yes, they are full time traders. They don't do any other thing. I understand that for a fact, but come on. You're not gonna be trading all your life, man. You have other things, other investments, other calls to catch up with, students to meet up with. You won't be spending all your day trying to get OBs. It's crazy, but a lot of people do it, and some are really good at it. No cap. Some are really good. I give them that. But the thing is, when looking for OB, the best way to actually get an OB is a look at the higher time frames. Yeah, it's good because we already know that at the higher time frames, you always get the best confirmation, the best reaction, a higher probability trade. That's it. But when you start going to the lower time frame, you get a lot of noise, you get a lot of fake outs. So, that being said, the smart money concept is basically trading the head and shoulder pattern. That's the truth, believe me. Because first off, you wait for market to form a higher high or maybe a lower low, then you wait for a break of structure. I can't really tell you how I determine my break of structure because that's a private thing. It's just for my students in my channel and in my group on Telegram. But I can only tell you one good thing is the market will always look for a fair pricing, and that's the truth. Whenever you're trying to look for an OB, look for fair pricing. Don't go looking for OBs where you know that the market is still at maybe the break of structure or the market is still maybe at a higher price or thereabout. We have what we call discounted area, and that helps you reduce a lot. But another thing you have to work on is your patience. So that being said, looking at on this chart, let's use the Fibonacci tool for an example. You draw your fib maybe from your high high to a lower low. Now you have the 50% level, you have the 61.8, you have the 78.6, you have the 88.6, then you have the 100 level. Now, and a lot of people using the fib just trade off of the 61.8, some maybe the 78 or 88. Yes, we also have the 71, but that's just assumptions. You don't have reasons for trading off those levels. You just assume, okay, the market is going to come to either one of them. Then you put your stop loss at the high, which is the 100. To me, it doesn't really make sense. But I don't discredit those that trade off of that. They are good at what they do, believe me. But to me, I need to see reasons behind every single trade I take. So, having said that, the only way I use the Fibonacci tool to make things clearer and easy for me is knowing fully well that the market 90% of the time always retraces into this area. When I mean area, I mean this area from the 50% to the 100. Now, I will say that since the market always retraces to this area, there is no need for me now to be looking for OBs around this area because it's of no use. The market will always take me out 90% of the time. You get my point right now. So, 90% of the time, the market will take me out if I'm going to be trading my OB from this area for a downtrend. Meanwhile, the reverse is the case for an uptrend. So apparently, I shouldn't be trading off this area for a downtrend. I should be looking to trade off this area. So thereby applying that already reduces the OBs you're looking for, it reduces the area you're looking for OBs. So having that at the back of your mind right now, you're not trying to see, okay, how do I apply that now? Having that at the back of your mind, you're now looking to trade off of this. Now let's see. Now you had three OBs now. Now you marked up your Fibonacci now, and you can see that One OB is below the 50% level, and that OB 90% of the time is going to take you up, right? So apparently, you don't want to be risking your money at that. So taking that off, you can see right now that you have two OBs protecting your capital and giving you a higher chance. So right now, you know the truth behind smart money concept. Thank you guys for watching. Undercover trading, always swing trading simplified. Have a great week.